All right, everyone. So our technology sector is now up, and so same as what I recorded on the previous video here. A strong sector, but due for a larger pullback. I'd love to see a pullback to the 291 area. Don't know that we'll get it, but that would be great because then we're going to have some really nice setup, not only on this but also on some stocks within that sector. Consumer staples, 3-month downtrend, not too excited about that. Real estate, weak, 3-month downtrend at a potential support area, but that's not something I'm looking at. You can trade this, but I don't trade downtrending securities if the market's going up. XLU utilities, it's on an extended, pullback here since October 16th, so about a 2-week pullback. 13 days or almost a 3-week pullback in a few days here, but that's a bullish candle, so it might break above that. But usually what we look for are higher highs and higher lows. So when it pulled to this higher high, we were looking for a higher low, and it made it here and then gave an entry, but ultimately didn't make it back here and make a higher high. So then it reversed to the downside. So shorter term, this is going to the downside. If we looked at the weekly candle, at the end of this week, if it looks like this, then I would be willing to put a conditional order in. If this was Friday right now, or this was Saturday, and this candle here was Friday's candle, you could place an order to get in above that if it went above it on the next trading session. So, but on the daily basis, a little bit weak in the shorter term, but still strong. But again, I don't trade utilities. It's not a bad thing. You could trade the ETF and make some money on that. But that's that. Healthcare is super strong sector, but a lot of consolidation recently. So, but technically, this is a higher high here. This green candle there closed above the highs over here. And now it's pulled back on 4 days, and it's given us a bull flag setup above the 30-day. So if you wanted to trade the ETF on this, you would trade above the high of today's candle, or the high of yesterday's candle, and get in, but you're going to have some resistance right there. So what I would be looking myself are stocks within that sector, within the healthcare sector, that are strongest. Last up, consumer discretionary. It's in a resistance area, but it's got, unless it breaks out, I would not be looking at trading this. If it does break out, you're looking at 243 down to the lows here at 229 or so. You might have a 15-point move to the upside. So again, I would look at stocks within that sector and with the strongest industry groups within the discretionary sector. But overall, we're still trending up on most of the sectors. The commodities, gold, it just had a huge run. It's consolidating some of those gains. Hasn't moved back to the upside yet, but just might very quickly. Silver, the silver ETF, it's still strong, but the strongest setup really is on the weekly on this. There was a daily setup, but now it's a weekly. If it goes above the high here of 48.99 from last week, then that would indicate a resumption of the trend up, and it might go to 57 or so on the breakout target. So we're watching it, but we might get a bullish candle this week. This might turn out to be green by the end of the week, and then give us a better entry than what we had based on last week's candle. But we don't know. In the next 2 days, this might just pop up and start going right back up. So we'll see. 10-year Treasury notes. We know that that we're uptrending on this. If we're uptrending on the price of the 10-year Treasury note, we know that interest rates are coming down. And so when bond prices go up, interest rates come down. There's an inverse relationship. So when interest rates come down, that's good for the market as a whole, because it makes borrowing costs lower for both business owners or businesses and consumers. And then last but not least is the dollar relationship to the euro. We're going to go back to the daily candle. Actually, I should do that on the Treasury notes as well. And so, so there's just a sideways trading action here, really, for, between 113 and 112 area. So if it comes down some more, interest rates, that means if the prices come down, interest rates are going up, but this is still trending up in prices. That means we should see a reduction in interest rates. And we know the Fed did cut rates last week. And also another bullish indication is for interest rates coming down is the lows of the last 3 days are higher each day. So buyers are stepping in on this at a, not letting it go as low as before. So that's also kind of a bullish indication right there. The euro US dollar, the euro is weakening against the dollar, so the dollar's been gaining some strength. With that said, we're at potential support area, so we'll see how it plays out. And then last thing we're going to do each day and each week, we look at the Magnificent Seven. Those are the 7 largest non-financial NASDAQ 100 stocks. Apple, super strong uptrend. I'd like to see an extended pullback, but if it goes above the high of tomorrow, then the uptrend is resuming. But I'd rather see it pull back to 257, 260, and then be able to trade it up to 277 and beyond. Amazon, a huge gap up 2 days in a row. It's a bearish candle, likely to pull back and test that breakout. So we'll just keep watching it, see what happens. Google, it's been super strong, pulled back 2 days. Today gave a bullish candle. If it goes above one of these candles, it's a resumption of the uptrend. Facebook, downtrending now in the 3 months. Microsoft, it gapped up here, but wasn't able to close. It did close up there. So technically, this is an uptrend. We had a higher close up there, but now it's on a pullback. So not something I'd be looking at trading, but it's an uptrending security. NVIDIA, we see we made a high back on October 29th at 212.19. Today, 211.34, didn't quite get up there, so there's some bearishness there. So I'd see a pullback either to the midpoint of this large green candle or possibly a little bit lower. It would be nice to see it pull all the way back to the 30-day moving average. If it did that, we're looking at a 187 with a move back to 211. So you're looking at a 24-point move on 187. That's close to 15%. And if you're buying options, you can multiply that by 8 to 10. So you're looking at 100% plus return just getting back to these levels if it does pull back and give a bull flag setup. Tesla, new high close today. So, the targets on this, if it goes above the high of today, then you're looking at 507 and 530 and 566. So a lot of potential there. It's a very volatile stock, but, you can make money on it. So you just have to have a trading plan to get in at the right time and to cut your losses short if it goes south. And so with my service, we're offering 7 different proven trading plans. Again, I paid $26,000 for my investor education. And so that's the foundation of those trading plans. And so we're going to teach people technical analysis. We're going to talk about how options work, what to look for if you're trading crypto, what to look for if you're trading futures. We're going to talk about position sizing, money management. And, we're also going to talk about for long-term investors or people with 401ks, IRAs, or long-term holdings and mutual funds. We're going to educate them on how they can hedge themselves, in the event of major market crashes. There's no reason why someone should lose half their money when the market crashes and drops 57%, like it did back in, from 2007 to 2009. So, so that's kind of a recap here. I have some different watch lists during our live trading sessions every day. Part of the service we're doing is 2 hours of live trading every day where we're going to teach on specific topics. And then we're going to review charts and look for setups and then place conditional orders. And so, that's pretty much it for today. Stay tuned. You'll have some more information soon. God bless.